Hi viewers, this is Rashid, your business and financial consultant. Uh, Thank you very much again for watching our videos and liking and giving us your positive feedback. So today we will talk about some recently happened some significant changes in the mortgage industry. Uh, you know that we are all going through this pandemic corona situation. So because of that, the economy is not doing very well, and some jobs are at the verge of loss, and some businesses are not doing well. Uh, they may not perform in coming days. So and government is actually trying their level best. They are providing help to individuals by providing emergency funds and businesses as well. But you know that they cannot continue in a long term situation. So what happened that when government offered this mortgage deferral um, offer during this past few days, um, in the corona pandemic circumstances, they find out that 20% of the total mortgages have filed their deferral mortgage deferral payment. So that is a significant amount. Considering this significant amount of deferral, which has become now in the red zone area, these mortgages, those have filed for deferral payment, there are possibility that many of them may file default. Uh, so this is which is not a good sign. So so uh, foreseeing that danger, the government has offered and implemented some changes in the mortgage industry. We will gonna talk about that, those industry changes that are going to be implemented in the industry, when it is going to start, and what are the changes, what are the new rules, what are the the old rules, and what are the implement of these changes on the market, and what is the going to be effect, how much or what kind of effect is going to create on the individuals as well. So because of the just like before, we have um, again prepared a presentation for you. We'll show you something the uh, about the recent changes that government has announced. So under these changes, these changes are going to be actually implemented starting from the 1st of July. So 1st of July, after 1st of July, there will be new rules. So those will be implemented. So effective 1st of July, the following changes will apply for new applications for homeowner transactional and portfolio management insurance. So these are changes going to be implemented only on the insured mortgages. So keep it in your mind. So insured mortgages, old rules. Applicant may apply with the minimum credit score of 600. It was an old rule. Now, after the 1st of July, there is going to be the new rule, so that you should have established minimum credit score of 680 for at least one borrower. So if you have two borrowers, like a husband and a wife, or maybe your partner, or co-applicant, then one of them at least should have a 680 score, and other may have little less for that. So previously you could go as low as 600, but now one of them has to have a 680 Beacon score. So debt service ratios are GDS, and which is called normally GDS and TDS. Under the old rules, we could go max for 39 GDS and TDS for 44%. But under the new rules, they have lowered down or tightened the situation for GDS 35%, TDS 42% max. So you should know that this is the your qualification criteria. About the down payment for insured mortgages, previously you could have a gift payment from your you could have a gift from your father, your mother, your brother, your sisters, your near and relatives as a down payment. But now that money is not going to be considered as a down payment. You have to have your own money generated by your own money, either your saving or your um, remittance or something like that. So you should have your own money, not the borrowing money from your near relatives. About the refinancing, the CMSC also touched about the refinancing, and they said that suspending refinancing for multi-unit mortgage insurance, except when the funds are used for repair or investment in the housing. And so this is the impact about the refinancing. Now we will know that what these changes are going to have impact on the market. So market CMSC foresee a 9% to 18% decrease in house prices over the next 12 months. So you should have in your mind that market is going to have a correction, and the prices are going to be adjusted in the coming days for next 12 months. And keeping that view in your mind, you should take any decisions. And what are the effects of individually about these changes? You should know about individually how it's going to affect you. So under the current rules, a family with an annual income of 100,000 and a 10% down payment could qualify for a home worth for $524, $980. Under the new GDS limits of 35%, the same house can now only have afford a home of $462,860. So you should know that these are the new rules. And before finishing this presentation, let me tell you about our services, that we are residential mortgage brokers. We offer refinancing of current mortgages, commercial mortgages, private first and second mortgages, loan consolidation, debt removal, bankruptcy help, and consumer proposals. So my company name is xbanker.net. We are business and financial consultant. Mortgage brokers, we are licensed mortgage brokers, insolvency counselors. You may call me on my number 647-300-3304. My email is info@xbanker.net, and my website is www.xbanker.net. And please feel free to contact us whenever you want. So before finishing this video, I would request you to please give us your feedback. We'll be waiting for your feedback. Thank you very much and have a nice day. Bye-bye.